Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Morning, folks. Morning. Hope you are well. Wednesday, 3rd of December. I tell you what, if you haven't got your Christmas tree up, get it up because it's that time of year. Welcome along to all the regulars. If you're tuning in again, thanks for coming along. If you're new, wondering who's on your screen today, my name is Cash Shosted, representing the Property Management Group for your 6-star team here at Positive Collective. Super excited as always on a Wednesday morning with a bit of coffee, a bit of energy. And we're going to talk all things property management, holding your investment property for a longer period of time. And of course, that generally builds out some solutions and some strategies when it comes to how we go about that. And so today is no different, that's for sure. I've got another little comment or shall I say story when it comes to, what other landlords are doing out there across the country. And I thought we'll share that again today. Get your comments and feedback in the chat as well as always, team. And we'll kick off today's session. So, if you haven't met me before, I've been doing this about 15 years. I'll tell you what, it's taught me a thing or two on how to win and how to not win. And so certainly one of the objectives I have at Wealth Coffee Chat is to share the things of what not to do. And then you can implement that into your strategy. So that's me in a nutshell. 10 past 8, we do this every Wednesday. And of course, the other members of the 6-star team. And so I can see a few of you guys already jumping on. So Caroline's on this morning. So morning. Hope you're well. Good stuff. And as I click through my buttons here on my side, we'll get on with today's topic, which is 5 ways I believe you can ensure that you are getting value for your money, you're getting bang for buck when it comes to your landlord's insurance, because not a week goes by, team, where I see stories and some insights across the country from landlords who either have taken out the wrong policy or, in fact, haven't even taken out a particular landlord's insurance policy at all, and it gets them into strife and generally sparks a lot of conversation with other landlords, and everyone puts their 2 cents in. But what I find is what I find really, really interesting is that no one goes out of their way to actually find the right policy for you. And so I'm not here to promote any particular insurance policy in particular. I'm just here to give you guys a bit of a framework around maybe what to look for. So that's what we're going to do today. Listen, if you got any some crazy insurance claim stories, pop that in the chat. Always good to hear what you guys are up to. But I'll start off with this. Okay, so this is a particular landlord across Australia, and I won't obviously say the particulars, but in a nutshell, they said, hey, I've just had a tenant vacate the property. They broke lease, they vacated, they owe a bit of rent. not a bit of rent, they owe $3,500 in rent. There was some damages and some other items along the way. So from what we gather so far, the amount owing here is well and truly above and beyond the bond. So we're about $3,500 in funds owing. She's looking to change property managers. They've gone through tribunal, magistrates court. So it sounds like they've gone through a bit of a process here. And the question is, hey, do I pursue this through a debt collector? Now, we don't know the full story here, but this goes on a lot, team, where landlords are in situations where they've had a rough tenancy, renters owing, there's some damages at the property, and we're going through a tribunal legal process, which is time and money, of course. But ultimately, what wasn't mentioned there was, how we go about submitting the right claim on our landlord's insurance. And maybe this is because they haven't got a policy in place. Maybe this is because the policy that they have when they look at their product disclosure statement, it doesn't actually include the things that they actually need. And so from my experience, people shop on the price and they're looking for the cheapest policy and not shopping and looking for outcomes. Right? You want things to be in place if and when things don't go your way. So the 5 things. Number 1, understand your risk. If the rent wasn't going to come in for whatever reason and the tenant was in arrears and you were going down that process, if that was to happen and you've got your monthly mortgage coming out, what happens then? Are you covered? Understand your risk, because what will you do and how will you go about it in the event that the rent hasn't come in that month, right? So you got to understand your risk. How are you going to manage that financially? How are you going to manage that mentally? How are you going to manage that physically? You need to make sure we run this like a business. And so obviously, number 1 is understanding your risks. Know what you're in for in the event there's no rent or there's some damages in play, because your insurance policy certainly can kick into gear. I mean, we always say, and you always hear it, right? You wouldn't go traveling without travel insurance. I think, if you want to own investment property, get landlord's insurance. It's a very, very cost-effective investment, in my opinion, per year. So that's number 1, understand your risk and be comfortable with what you're in for. Number 2, shop around. Now, when we say shop around, like I say, my experience is that people will shop on price and not shop on the outcomes to protect themselves. Because at the end of the day, team, your landlord's insurance, just like your travel insurance, is to minimize your risk. It's to protect you and your property, first and foremost. So, again, what I tend to observe out there is that, especially when it comes to building insurance, we tend to take the first policy that's put on our plate. Now, that's generally from the bank. From what I hear and from my own experience, it happened to me years back. I just took the first policy that the bank put in front of me. I didn't really look at it. I definitely didn't read it. And, to be honest, if you ask me, do I actually know what was in that policy? No, I do not. And so that is a very common mistake that a lot of new investors make, especially when it comes to insurance policies. We're not really understanding and looking at what's in the policy. So, like I say, if you want to shop on the price, then when something goes wrong, you may not be protected. In this case, they've got $3,500 in rent owing and damages, and it doesn't sound like they're going to get that back anytime soon. So I don't know about you, but I like that $3,500 in my pocket. So that's number 2. Just when you are shopping around, don't shop on price. Don't only shop on price. Shop on the value. Shop on the outcomes that policy is going to bring you. Number 3, you need to assess what is actually in the policy. So like I say, in my experience, the cheaper policy when we shop on price generally doesn't protect you. It's generally going to provide a policy and an environment where you have a lack of protection around you and your property. And so when these things come through, now it could be obviously around loss of rent and damages, but what's that cover when it comes to legal liability? That's a big one too. What about unpredictable events? Depending where your property is located, fire, flood, storm damage, things like that. You've got to make sure that when you're looking at policies, you get an understanding of what's going on in there. So assess what your policy actually covers when it comes to unpredictable events. Number 4, yes, don't forget. Maybe I wrote, yeah, I wrote, don't forget to check your excess and exclusions. Team, I keep harping on about it. For example, there are landlords insurance policies out there where if you get in a situation where you are looking to claim rent arrears, there is actually a 0 excess claim, which is amazing. And I think that's exactly how the great policies should be structured and stay structured that way. because you've paid your premium. And so, in the event it can be a common thing depending on location that you're not getting charged that excess. I've certainly seen policies where they're charging $500, $1,000, $1,500 for you to claim basically the exact same amount back in rent arrears. As you guys can imagine, if you're paying $1,000 and you're claiming $1,500, you're only going to get that $500 back. But of course, when it comes to malicious and accidental damage, other particular claims, within your policy, there can be excess charges in there. So a common one we see is, $500 for an excess on, say, tenant damage, which is not too bad when you consider what that damage might be. We might be talking a few $1,000s. I mean, in this case, this particular lady has $3,500 to claim. So, it'd be interesting to see what is actually, framed up in her particular policy. Because, landlords, I guess, from time to time get caught out not understanding their policy excess framework in that sense. And so, you need to make a call and a judgment on, what you're going to claim, when you're going to claim, how much you're going to claim in that space. So, of course, understand your excess inclusions. And number 5, the ultimate one, I think, is just you need to understand exactly what you're buying. Now, again, would we say it is very common for landlords, new investors in particular, to not read product disclosure statements, perhaps to rely on their property manager to just take out the landlord's insurance policy for them? Is it common to rely on the bank's product that they put in front of us? Is it common that most landlords around the country don't quite understand exactly in detail what they're actually covered for? And I think that would be a very common observation across the country. But certainly when it comes to your policy and understanding that in full, is you just need to know what those terms and conditions are in full. And so, listen, when you're talking to your property manager, you might be settling on a brand new property soon, and you're talking to your property manager, and they might have a few suggestions. Get that PDF off them. Call the insurer yourself if you've got any questions, because they are the experts at the end of the day. Property managers are here to make a recommendation. And unfortunately, folks, sometimes the property manager doesn't even know what is actually covered within your policy. And so it's not to say that they should necessarily, or they should, but take it into your own hands and make sure you know what you're looking for. So understand your risk, make sure you compare policies, assess your coverage within that policy and what you need. Go for outcomes and what it's going to get you in the event something does happen, and not necessarily shop on the premium price, because as we say, the cheaper policies generally, in my experience, have a lack of protection. And that's what it's ultimately about. This is to keep you safe. This is to help you hold that property for a longer period of time, and ultimately, grow your wealth through property investment. So that's my 2 cents today, team. It's short and sharp. I'm going to leave it there. Don't forget, tomorrow, 8:10, we've got the financial advising team on with us. And so they'll take you through a lesson or two. So a bit of information this morning around landlord's insurance. I'm going to keep harping on about it because, like I say, it's quite common out there for landlords to miss this one. So that's it for today, folks. You enjoy your Wednesday, and we'll see you tomorrow, 8:10 Queensland time, for another episode of Wealth Coffee Chats. Bye for now.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.